cigarette to hotel business conglomerate ITC reported its Q1 FY22 numbers, and it's an inline set of numbers coming in from the company. Revenue slightly above the expectations, while profit and margins were exactly in line with what the ET now poll was. So moving forward, let's talk about the breakdown. Revenues saw a 37% growth coming in on a year-on-year basis. So revenues are coming in at 12,271 crore rupees versus 8,911 crore. Profit saw a 28.6% growth coming in on a year-on-year basis, while the Ebitda margins also saw a 50.8% growth, and the margins actually came in at 32.7% versus 29.7%. So 300 basis point expansion in terms of the margins of the company. Now, obviously, when you compare on a year-on-year basis, there is a low base effect also which is supporting the company, but the FMCG business has continued to see a good growth momentum, especially led by good growth coming in from hygiene products, fragrances, spices, snacks, dairy and Agarbattis, which did well for the other FMCG segment. So FMCG saw a 10.4% growth. Now, cigarette business on a year-on-year basis, obviously we are seeing a growth coming in over there, but on a quarter-on-quarter basis, we are seeing a decline because of the impact of the second wave, which surely impacted the operations of convenience stores, which overall impacted the cigarette business of the company. Even hotel business that had also started seeing a recovery coming in the second half of FY21, but the second wave impacted the hotels business as well because of the restrictions that were put in. There were no staycations, weekend getaways, that all reduced, so that surely did impact the hotel business of the company. Other than that, when you talk about education and stationery products also, those business also continue to be impacted due to the continued closure of educational institutions. On the e-commerce side, actually, the company saw a good sales in e-commerce have doubled on a year-on-year basis, and now overall the salience for e-commerce stands at 8% segment of the segment revenue of FMCG business. So surely interesting, salience coming in from the e-commerce business of the company. Now, other than that, when you talk about the margins of the company, margins are surely seeing an expansion this time around. And, we had seen certain increase in commodity prices, but, input costs, but that was mainly set off by the judicial price hikes the company has taken, as well as, overall the margins are improving because of the favorable products mix, as well as the cost saving measures also which the company has taken. So all in all, on a year-on-year basis, obviously it's an optically strong set of numbers. Also, FMCG business has continued to do well for the company. Agri business also seeing a 9% growth. Paper business seeing a 54% growth on a year-on-year basis. But the cigarette and the hotel business surely seeing a bit of a lag coming in because of the second wave on a quarter-on-quarter basis. But the company has surely highlighted one thing for the cigarette business is that on a week-on-week basis, now we are seeing an improvement coming in since mid of June in the cigarette business, and cigarette business is seeing a faster recovery compared to the first wave. So surely an interesting fact coming in over there in terms of recovery in the cigarette business, and let's keep an eye out on ITC and how it performs in trade.